Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is May 30th. Really one more day left in May, and then we're on into June. The year is really flying by. They seem to fly by a little faster every year, in my opinion. Maybe it's just me. Today we're going to take a look at Salesforce. This is out of the information technology sector. Let's jump right in. And before we get into the video, if we could take a moment, hit that thumbs up button down below. If you find any value in the content, make sure you're subscribed to the channel. Hit the subscribe button. Join us on this journey to financial freedom. Make sure the notification bell is rung down below so you're notified whenever we put out any new content. Doing all that really does help out a small YouTube channel like mine. Spread the videos, helps get the word out, helps with the YouTube algorithm. And drop a comment down below. Let me know what you think of the video, as well as what do you think of Salesforce. Is it one you're watching? Is it one you're buying? Is it one you're avoiding altogether? Share the videos with anyone you think that might find value. If you know any investors out there, go ahead and flip this over to them so they can see, or maybe you have someone younger in your life, a niece, nephew, your daughters, sons that you want to get into investing and they're just not listening to you. Maybe this will help get through to them. So share the videos as well. That really does help. This is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I am interested in investing. We're going to go through this in this video. At the end, we'll look and see if it meets 5 of 8. Highlighted in green here, 6 of 9. That really is for banks. I use price to book, 1 being fair value, anything under 1 being undervalued, anything over 1 being overvalued for banks. Any financial company, it doesn't really work on all of them. Credit cards, for example, there's such a wide range in price to book. You could also compare them to their industry average and use price to book for any company. But if you're going to use it, like I said, make sure you're looking at 2, 3, 4 other companies in the same sector and then comparing them to each other. Don't use the one because it's off on some other companies outside of banks. So let's jump in here. And we're back to Salesforce. Check them out at www.salesforce.com. That's www.salesforce.com. That is their homepage where I pulled this information from. And Salesforce is like I said, information technology company, and they really offer, product solutions, data solutions, custom tailored to different companies and different sectors. From what I saw on their website, there's not a sector that they don't really cater to or have some sort of a presence in. And then you can see over here some of the products that they offer, Create 360, and these are all information technology, like data packets. So they're helping with sales. I think they do some back of the house stuff around pay. Really, they're custom tailor a information technology package to whatever your business is what it seems like they really do. Artificial intelligence, the cloud, right? If you're in sales, service, marketing, commerce, data clouds, they have a cloud that you can run your products through their cloud or your information through their cloud and cloud storage. Tableau, MuleSoft, Slack. You could go into their products page and then click on each one of these and get kind of a rundown of what they are. Net zero, you want to be one of the companies out there that's want to go carbon neutral. There's ways for them to look at your carbon footprint, I'm assuming, and give you options of how you can reduce that. Our company does some of that, and some of it's as simple as changing light bulbs out in your building from old style light bulbs to new LED that are more efficient. You change a diesel generator to a gas powered generator because they provide or produce less carbon dioxide whenever they burn, stuff like that. So they'd look at it. We've had companies come in and look at ours. DTE came in and looked at our carbon footprint and gave us kind of a package of how we could reduce it. Some of it is setting aside a certain amount of money and donating towards projects or helping pay for renewable energy projects like a solar field or something like that. And then you get a certain credit or percentage towards your carbon footprint, or however they put it. Small businesses, partner apps, and that's just based on stuff, not necessarily Salesforce. That stuff my company has done. So that's not, but I'm assuming that's what they're doing here with this net zero, something very similar. Small business, partner apps and experts, customer success, Hero Q. I don't know what that is. I didn't click on all these, but again, if you go to their homepage, you can click on all of these and it gives you kind of more of a detailed description of what they are. Salesforce is cloud-based CRM. That's their ticker CRM software. What is CRM? You can go there and click on that. That's just their ticker. It makes it easier for companies to find more prospects, close more deals, and connect with customers in a whole new way so they can provide them with amazing service at scale. Salesforce brings together all your data from any source. Einstein 1, our complete source of products, unites your sales, service, marketing, commerce, and IT teams with a single shared view of customer information. With artificial intelligence integrated across all products, Salesforce helps everyone in your company work more productively friendly, and better deliver personalized experiences customers love. Yeah, so it's a customized data solutions for different companies based on the company and the industry that they're in. Now, the reason we were taking a look at them, huge drop on the day, 19.79% down on the day. That's huge. We are talking about Salesforce, ticker CRM, out of the information technology sector. Closed out the day at $218.01. And believe it or not, that is within 15% of their 52-week low. 52-week range as low as $193.68, as high as $318.71. So not right up against their 52-week low, but pretty close. Much closer than they've been over the last year anyway. Their market cap of $211.772 billion. Beta is not listed. I believe when I looked at the other site there, they were above 1, and probably because of some of the volatility they have had lately. Stockanalysis.com, I believe, having them over 1. I'd have to go out there and look at it. I should have looked at it and pinned it here, but I didn't. PE ratio, $51.79 per share, 51.79. Now that seems pretty high, but if you're going to be paying a high PE, it would be for a information technology company that's relatively small. Now, they're not super small. $211.772 billion is not a small company. This is a mid cap here, leaning towards a large cap company here, if not a large cap at 211. I don't know exactly what the cutoff is. I should look that up. But this is 51.79 is something you would pay for a fast-growing tech company. This is more in line with, like a Palantir or something like that, or a Tesla for a lot of years, where people were paying insane price earnings. I still think it's a little high, but it would have to grow very, very fast to justify such a high PE. EPS sitting at $4.21 per share. Earnings date is August 28th to September 2nd. Sometime in there, it's coming up here. Forward dividend is $1.60. So they pay $1.60. I believe they're going to be a quarterly payer. They've only paid one payout. So this is stretching it a little bit to call them a dividend growth company, because I don't even know if they're going to grow it. I'm assuming they are going to grow it. It could just be a one-off though, or maybe they're going to do it annually, one time a year. I don't know. But you'll see that here in a little bit. So $1.60, at least $1.60 on the year, and they've only paid one time. So I'm just going to call them an annual $1.60 with a very low payout ratio of 0.59%. Ex-dividend date was March 13th. They paid out April 11th. And again, they've only paid out one dividend. 1 year target estimate, at least according to Yahoo Finance, $336.60. So they see it going back up and setting a new 52-week high. So if that is the case, you could be getting quite a discount on this particular company right now. Now we're going to jump over and look at dividend yield theory, but for this one, it's not really going to apply. We don't have 5 years of history to look at. We don't even have a trailing dividend yield to look at either. It's just 0.59%. That's the only one they've paid. They've only paid out one time here on April 11th, so we don't have any data to go on. So there wouldn't be a check there. Free cash flow, we're going to jump down and look at free cash flow. We want growing free cash flow. The payout ratio here says 0. It's actually in the 30s. Whenever I looked at stockanalysis.com, we'll see that here in a little bit. 2021 free cash flow, you can see $4 billion in free cash flow. Big jump up, 5.2 in 2022. 2023, 6.3. 2024, 9.4. Very nice, steady growth. Here recently, not only has their cash flow been growing, free cash flow been growing nicely, they've started repurchasing shares. Over $4 billion in 2023, so far $7.62 billion. And if they feel like it's cheap right now, great time to be buying back shares. So really like that they've started buying back shares. I'm wondering how many years they may have been diluting shares, so they're starting to pull some out of the market now. So either way, I like to see a company pulling shares out of the market. Now we're going to jump over to stockanalysis.com. I always recommend more than one site. You can pick any sites that you like. These are just two that I look at. I'm not affiliated, just two sites I like. I like the way they present the data. Stockanalysis.com goes back further in time. I can look at more data further back for free than Yahoo Finance, but I like Yahoo Finance for the 4 years. It gives me a good snap in time. But anyways, 34 stock analysts, a lot of eyes on this, have taken a look at this. They all call it a buy. They have a low estimate of $220. It currently sits lower than their lowest estimate. So if it was to come back up, that would be a 0.91% increase from where it currently sits. They have an average estimate of $293.79. That would be a 34.75% increase from where it currently sits. High estimate of $365, which would be a 67.42% increase from where it currently sits. Average is pretty close. What we saw in between their average and their high is what we saw with Yahoo Finance at around 330. So their estimates, it's sitting currently lower than all of their lowest estimates, and 34 people have taken a look at this and thrown out a number. So again, might be a good time to take a look at this one. Statistics, we like to look at return on equity, return on invested capital. I like 10% or better. Their return on equity is low, 7.1%. That's too low for me. The return on invested capital is low as well, 5.8%. Kind of disappointed on that, but a lot of times these fast-growing companies like this, they're still dumping money into to try to grow, and their return on invested capital and their return on equity is not great. As they grow, maybe in the future it will turn around. EPS growth very high, forecasted at 29.81%. I'm looking for 5% or better. Revenue growth forecasted at 10.01%. Very fast revenue growth. Now I don't know if that justifies a 50 PE, but that's very, very fast revenue growth, double digits here. It's saying they're going to be a quarterly payer, payout ratio at 38.1%. Again, no dividend growth. They just paid out the one time. Buyback yield is positive at 1.3%. Shareholder yield is positive at 2.4%. Starting dividend yield is 40 cents per share, and we'll have to see. I'm assuming they're going to, hold this for a little bit and hopefully grow it next year. Maybe they grow it a couple times this year. That'd be awesome. But low payout ratio on this one. Not a very high payout yield. Very low payout yield on this one as well. And if they are going to pay 4 times, right, that's a dollar. I guess that would make the $1.60 that we saw on the previous slide. So yeah, that makes sense. 40 cents per share. All right, quick run through the screener. Let's wrap this one up here. Understand the business. There's a check there. That's where we started. We started on their homepage. You should go check it out and check out some of their products so you know exactly what you're looking at. Growing free cash flow. It's definitely growing. Nice growing free cash flow. They're buying back shares like that. Growing dividend. I did not put a check here. You could put a check here. If you assume that they are going to grow the dividend, you could definitely put a check here. So that's I'll leave that one up to you. I didn't put a check because they've only paid out the one time. So I'm going to leave it unchecked. But if you were to say check there, I wouldn't argue with you too much. Dividend payout ratio of 75% or less. Yep, check there. Check evaluation. We couldn't do it. They don't have enough. They don't have 5 years of dividend history, so no check there. Buy below current cost basis or within 15% of a 52-week low. $218 is within 15% of a 52-week low. I think it's $221 or $222 is 15% of their 52-week low. Return on invested capital, return on equity, 10% or better. It was not. I didn't like that. So one thing that was not positive out of all the numbers we saw, really. Earnings per share growth smoking high, almost 30%. Check there. So you got 1, 2, 3, 4, 5 out of 8. This would definitely make it on my watch list. Might be worth one for you to take a look at, more of a deep dive into Salesforce. Let me know what you think down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Building a community of dividend growth investors so we can share our experiences. That's why I created the channel, so you can see a real portfolio built out over time, and I could learn along the way with you. You can see my mistakes so that you don't make the same ones. I don't have a degree or anything in this. I'm just a normal guy. I go to work every day. I do this because I want to leave something to my kids. I want to be able to retire sometime and not have to do the 9-to-5 grind. That's why I do this. And again, so hopefully some of you can get something out of this as well. I do personally read and respond to the comments. I'm always interested in your questions, opinions, or suggestions for future topics. So go ahead and drop a comment down below. Let me know what you think of Salesforce. Let me know what you think of the videos. Let me know what you think of the channel. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. Actually, hope you have a great weekend. It's Thursday, so this is the last one. Tune back in Sunday morning for our portfolio update for the week. I do those every Sunday morning. Another good reason to click that notification bell down below. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can money to never invest any amount of conclusion. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice counsel certified financial advisor.